About 2 years ago, I did a video offering some of my thoughts and opinions on a real estate investment trust company called Realty Income, ticker symbol O, that pays monthly dividends. At the time, there were high interest rates. There were a few economic jitters that caused the stock to kind of dip down into the 53s. So I was basically asking the question whether or not Realty Income would be a buy, a sell, or a hold. As a long-term shareholder, I thought it would be fun to revisit Realty Income, kind of take a look at where it's at now, where it's been over the last couple of years, and where it might be headed in the future. At the time I made the original video, my thoughts were Realty Income was a good investment. There were a few issues, but there was nothing there that I thought that Realty Income couldn't weather. And so far, while Realty Income has not been a stellar performer in my portfolio, nor do I ever expect it to be, it's done reasonably well. Keep in mind, I'm not a financial advisor. I'm just a guy on the internet with an opinion. So if Realty Income is something that you want to look into, take a look at it, research it for yourself, talk to your financial advisor, and make sure that it is something that fits well within your investment strategy and your own personal portfolio. Full disclosure, I still own shares in Realty Income and have added more since then. In that old video, I talked about why I liked Realty Income's portfolio, mostly non-discretionary retail like convenience stores, pharmacies, and big box like Walmart and Lowe's, stuff people need regardless of the economy. I pointed out external pressures like inflation and Fed rate hikes making borrowing expensive, with Powell hinting rates might not drop until 2026. Of course, we know now that the rates drop sooner than that. Nonetheless, the fundamentals were solid. Over 13,100 properties, 14.2% compound annual return since '94, 4.4% dividend growth, and 637 straight monthly payouts without a cut, even through 2008. Yield was over 5%, and I saw the dip as a buying opportunity, not a sell signal. So what's changed? Let's start with the share price. Back then, Realty Income closed the month around $50. Today it's sitting at about $59 a share. That's a 16+% increase just on price, not counting dividends. Over the full period, you've got gains in the 20% range if you add in those payouts. The stock has had ups and downs. It dipped below $48 in 2023. It climbed to over $63 in 2024, but it's trended up overall. No crash like some feared. When it comes to dividends, Realty Income still pays on a monthly basis. Right now it's at about 27 cents a share. Back then it was around 25 cents a share. It's keeping the streak alive with 666 consecutive months and 113 quarterly hikes. It yields about 5.57%. That's solid for a REIT. Okay, so annual growth rates have dipped slightly to 4.2% since 1994, but it's still increasing reliably, and there's been no cuts to the dividends. Their portfolio has grown too. Now over 15,500 properties, up 18% from 13,100. They've expanded internationally, all 50 U.S. states, the U.K., and 7 other European countries. And the tenants are all similar. Resilient names like Amazon warehouses, Lifetime gyms, casinos like Encore Boston, and U.K. grocers like Sainsbury's. Occupancy remains high, and they're not tied to risky sectors. One of the big shifts, interest rates. In 2023, the Fed funds rate was over 5%, and we thought it'd stay high till now. But rates started easing in 2024 and are at 3.64% today, with forecasts around 3.25% through 2026. That's huge. It lowers borrowing costs, making it easier for Realty Income to acquire properties without as much dilution pain. In recent moves, they just closed an $862.5 million convertible notes offering this week, netting about $845 million after fees. Part of that's for general growth, maybe some share buybacks. Analysts are bullish on 2026, predicting big deals like sale-leasebacks or acquisitions to boost the portfolio further. Total returns since 1994 are now 13.7% compounded. That's still impressive. Comparing then to now, my core view hasn't changed much. The external pressures eased faster than expected, which helped the company to turn around a bit. Their portfolio is bigger and more diverse. Dividends keep growing. In the business model, long-term net leases with built-in escalators still shines in a lower rate world.
That said, growth hasn't been the 50 to 80% explosion some hope for. It's been steady mid-teens total returns over the period. If rates keep dropping, that could accelerate things, but we want to watch for any tenant shifts or any broader recession risks. In recent quarters, Realty Income beat expectations. Earnings per share slightly above forecasts, revenues up 10% year over year.
All in all, Realty Income has proven itself to be resilient. If you're a dividend chaser like me, the REIT has value. And you can't beat the monthly dividend. It's almost guaranteed income. Granted, markets evolve, things change, so you always want to keep looking at it and revisiting it. But it seems like time and time again, Realty Income has simply delivered. 666 consecutive months of payouts. 113 quarterly hikes. It's a fair amount of growth, and I feel confident that the team behind the company knows what they're doing. 2 years later, I still feel like Realty Income holds a viable place within my portfolio and within my investment strategy. Again, these are just my thoughts and my personal opinions. So if you've also been an investor of Realty Income, how has it done for you? Or if you're considering adding Realty Income to your portfolio, let me know in the comments what you think. At least for the short term, I'm still an investor in Realty Income. We'll see where it goes, and maybe in another 2 years I'll come back and let you know my thoughts then. Hey, if you made it this far, like, share, and subscribe. It really helps my channel to grow and gives me an incentive to keep on doing these. Thanks for watching, and I will catch you on the next one.